So the stock is almost like at a 40% profit even now. So even if it goes to this resistance level, which is like 3000, now what is the total gain that you'll be making? You can easily make like a 33% gain on something like HDFC AMC. Even for such a big company, they have been able to double their revenues. They have been able to double their profits. Stock hasn't moved for the last 2.5 years. So what exactly is the problem with the stock? Hi everyone, welcome to today's video. Not sure if you can see, it's like monsoon season here in Goa. Everything looks clean, green, and it's one of my favorite, most peaceful times here in Goa. In case you guys are planning a vacation, highly encourage you to do it. On a more serious note, I am giving a very quick update about today's video. So I had shot this video as per the market data available for Thursday. And as soon as the market opened on Friday, some stocks, especially the AMC stocks, gave a massive breakout. Something like HDFC, AMC, NAM India had given a massive breakout. Important point to notice that according to me, these stocks are still not overvalued. Probably you could wait in case you are considering building bulk buying positions. So you could probably wait because of that, but under no circumstances these are overvalued. So yeah, so there is a very quick update, and also a very big shout out to our sponsors for today, which is taxbuddy.com. It is an excellent tax filing platform. As per the income tax portal, nearly 1 crore taxpayers have already filed their ITR. These individuals can now expect an early refund and processing from the income tax department. That's why I encourage all of you to file ITR early as well to enjoy same benefits. And who better to file it other than taxbuddy.com, which is India's highest rated tax filing platform. TaxBuddy is generously offering a massive 20% discount to my audiences. Follow these 3 steps. Number 1, sign up to TaxBuddy and auto apply the discount. Number 2, share documents requested by your tax expert. Number 3, sit back and relax as the tax expert will take care of the rest. Click on the link in the description and enjoy TaxBuddy's seamless tax filing experience. Hi everyone, welcome to today's video. So the markets have hit an all-time high, and a natural question comes. That is everything overvalued right now, or are there any specific opportunities left which are undervalued and where we can go and consider investing our money and kuch अच्छा profit बन जाएगा. So are there any undervalued opportunities left? To cut the long story short, there are many undervalued opportunities left. That is precisely what I am going to discuss today. This will be a rapid fire type of a video where I will condense a lot of information for you, give you a lot of power-packed information, combining economics, finance, fundamentals, technicals, everything put together. It requires a lot of research, a lot of time to create such videos. So kindly consider supporting it by pressing the like button. I know that you haven't done it, so please stop for a second and do press the like button. It would allow these type of videos to reach out to more people. So very quick first input, that's see guys, I mean I can be wrong about things and I can be right about things, but it's important as an investor to have a viewpoint, because if you don't have a viewpoint, then you are never going to invest your money, and if you don't invest your money, then it will definitely not grow even at inflation. So that's the first key point. Now I have been right about a lot of things. For example, in the last 1 year, I have been fairly bullish about the market, and I'm mostly invested in the market now. My bets on something like Meta, overall Nifty, you can go check this video where I had done live investing on Nifty, quite a significant amount. That itself has gone up by like almost 12-13% now. So whether it comes to US stocks, whether it comes to Indian stocks, for example, IDFC First has been one of my biggest bets, which has moved quite aggressively. Even something like Zomato has given quite an aggressive run up. Now, all these points I discuss on the member community and in the stock market community. So in case you're someone who is more serious about the stock market and want to learn things fundamentally, you could consider joining that. Now in today's video, let me present 9 specific opportunities, and please understand that from an economics point of view, we are at a very young bull run. What is the meaning of that? It means that bull run has just started. It is going to last for a fairly long period of time. As per my understanding, it could be 1 year, 1.5, 2 years. That remains to be seen. But we are pretty much in a bull run. Please don't be scared in terms of investing money. As long as you are buying undervalued assets, you will be fine. Many people who were bearish about the market, they are still sitting with crash. They are still thinking that, you know what, recession ka announcement hua tha, but market now it will fall. It is not going to fall because unexpected things happen in the market. And if you study macroeconomics and finance, you will understand this point fundamentally. And I have made enough video on that. You can go and check it. So over to the main video, and the first undervalued stock that I feel, which is there right now, is Paytm. Now I am going to get a lot of heat for that, you know what, Paytm is a dabba company. There is so much wrong about Paytm. You yourself have made videos against Paytm. Correct. But there is a very important difference between when I had made videos and where Paytm is today. So there are two central points that I'm going to speak about. One is about the evolution of the business model of Paytm, and second, its pricing. So let us first speak about pricing because that is an easier point to understand. So let me depict the entire situation of Paytm by taking you and depicting this particular chart. So when Paytm started out, or when it IPO'd at almost 1560 rupees. Right now, Paytm is trading at 849 rupees. So there is roughly a 40-45% discount, so to say, on the stock itself. So that is point one that you need to remember. Now, a related and a very important point here is that it is the time correction in the stock. So this IPO was released back in November of 21. It is almost 1.5 years and there is a minus 40% tag associated with Paytm's stock right now. Any IPO when it is launched, especially during the previous bull run when Zomato, Paytm, Nykaa, all these companies were launching their IPOs, they were doing it at a massive valuation. That was just like a crazy time for IPOs. IPOs were deliberately being designed in order to give investors exit. So that exit is done away with. So that exit has happened for a bunch of investors. For example, today, the price of Paytm is, let's say, at 800 rupees. This price discovery, this is a very important word, discovery has happened after how much time? After almost 1.5 years. The market is telling us the correct value. It is not my opinion. It is not someone else's opinion. Yes, all of us can debate that even at this 800 rupees, 800 rupees, is it overvalued or undervalued? But to cut the long story short, market itself has assigned a value of 800 rupees as of today after 1.5 years of price discovery in Paytm stock. This is the number one reason why Paytm seems okay as of now, given the fact that there is a 40-45% discount on the stock that has already happened. So valuations have corrected. This is part A of the story. Part B of the story regarding Paytm is fairly simple, which is that over the last 1.5 years, this has been a massive pivotal time for startups and the way the startups are being built and redesigned. Now, you might be aware of a Y Combinator letter that had gone out to a lot of startup founders, where the Y Combinator president or chairman had said something like that, you know what, agle 2 saal, next 2 years are going to be extremely difficult for startups. Please save cash. During that time, we have seen a lot of startups laying off their workforce, a lot of startups going under. Even something like Byju's is looking really bad from whatever is happening there. So to cut the long story short, startups have suffered a very bad fate. Because of what? Because of the fact that they were exclusively focusing on growth. They were not focusing on profitability. Now, Paytm over the last several quarters has started to focus on profitability. Now, you might have two responses here. One is, can you show some data that shows us that Paytm is focusing on profitability? And second is, why are they doing it? Why is Byju's not doing it? Okay, so let me address both these points. And the easiest way of figuring out whether Paytm is looking at profitability is to check the recent numbers. So you will see that, this is revenue growth, right? It has grown, no doubt about that. बहुत सारे startups के revenues grow like crazy, right? So that is not a problem. What about net profitability? So it is still a loss-making company, no doubt about that. But what about EPS in rupees terms, right? So here, this is earning per share. And you will see that at one point in time, its EPS was 700 rupees negative per share, right? Then it kept on falling. And you can see that it is now coming to manageable levels. So now comes the natural response that I'm going to buy Paytm when this becomes positive. That, you know what, right now I'm seeing like 1800 crore rupee ka loss is there, 1800 crore rupee loss is there. I will probably buy it when the company turns net positive. That's a great theory, no doubt about that. So right now, if the stock is at 800 rupees, and if it is almost given in the market that, you know what, Paytm is 100% going to become positive or profitable and net profitability will be plus here, then guess what the stock price will be? Well, it will be a lot more than this, because then the guarantee somewhat comes, or almost an assured surety comes, that Paytm is almost at that inflection point where it is becoming positive. So once it becomes positive, the valuation of the company is going to go quite a bit, right? So that is what I am also betting on. I'm not expecting Paytm to become like a hyper profitable company. I'm expecting Paytm to keep on bringing this negative EPS down and one day become profitable. Maybe it will take like 2 years, but the day it becomes profitable, this will go like 3x, 4x, right? So that is what I am betting on. Now comes the second part of the question, कि भाई ऐसा क्या है कि, you know, Paytm is looking at profitability, but Byju's is not. Very good question there. Let me quickly explain that. See, Byju's is a pre-IPO company. For them, accelerating growth was their number one matrix. They were not bothered about profitability. They were not able to IPO for whatever reasons. And even right now, their focus seems to be growth, not profitability. Paytm, on the other hand, has already IPO'd. It has given its investors an exit. What is the meaning of investors getting an exit? So let me quickly comment on that also. So here you will see a bunch of investors, FII, DII is public. And if you check on trades, you will see that some big investors, for example, Alibaba.com, and it has sold like millions of shares. And they have already gotten an exit at an okay price. Now, many of you might be thinking, yaar, you know what, IPO to 1500 pe hua tha, and probably like Alibaba sold it at, let's say, 900, 1000 rupees. So unko to loss ho gaya, right? They were at a loss. No, that is not correct. How much money did Alibaba put? You have to think from that perspective. If they have put the money in the private market at 45 rupees and they are still getting an exit of 1000 rupees, can you imagine the amount of gains that they have made? So for them, that exit has already been given. So one could argue right now ki even at 800 rupees, it is overvalued, undervalued. I don't know. But the focus is very clear that the company is trying to become profitable. Where is that profitability going to come from? It is likely to come from their mutual fund business, brokerage business. So that is what they are focusing on. They are getting good traction on it. So even if it remotely becomes profitable, there is a good chance that the stock price will double from here. So this is the simple message that I want to give, and it is also getting reflected on numbers. So this is the first stock. Now comes the second stock, which I had already spoken about, which is Zomato. When I made the video on Zomato, I got like so much negativity. And look at the performance of Zomato in the last few months. It has gone like crazy. The stock price rise has been absolutely astounding. Now, why is that happening? Now, again, fairly similar story to Paytm, that Zomato is also a loss-making company. But again, price discovery on the IPO has already taken place. And if you check the stock price, it is at roughly 75 rupees as of now. The highest ever stock price was roughly 150 rupees. So one could still argue that 50% to 50% discount the Zomato stock is there. Now comes the natural question that is it overvalued, undervalued at this stage? See, I don't know about undervaluation or overvaluation. That will be anyone's guess. But some good things are happening with Zomato. First critical thing that is happening with Zomato is that it is somewhat beating Swiggy in terms of competition. Now, specific valuations were done for Swiggy. It is being noticed that, you know what, Zomato is becoming much more premium compared to Swiggy. For what reasons? Because the revenue growth for Zomato has been faster compared to Swiggy, which is good. Second key reason, if you again go and check the numbers, sales have been at an all-time high. If you check EPS, right? Again, this is a better matrix to check, and you will see that it has been constantly brought down. A lot of unnecessary spending has been done away with. Now, again, very similar story playing out for Zomato compared to Paytm. Now comes the natural response that, yeah, you know what, I do want to buy Zomato, Paytm because I use the product, I see it everywhere. It is like one of the stories that can transpire from here. It can become a multi-bagger. No doubt about that. But there is a way you aggregate these type of stocks. It's not as if that on Monday morning, the stock market is going to open. You are going to go and invest like all your money in it. You need to build little positions over time. On top of that, you need to follow diversification principle. Diversification principle means that, for example, let's say that you have 10 lakh rupees in the market. Now, out of 10 lakh rupees, 6 lakhs worth of stocks should be of really good companies, right? Where the profitability is there, all good things are there. Then maybe like 10-15% of the companies could be risky like Zomato, Paytm, where you are seeing improvements. This is the most important part. I know many of you might have missed it. Stock ke naam bas note kar lo and that's it. So many people approach it that way. Please don't do it that way. Please understand there is a reason, logic behind which why you buy certain things, and there is a style of building your positions on a particular stock. I teach all of this on my member community also, so you could consider joining it. Again, I present commentary almost daily there. So that will give you a better understanding on when and how to build positions. So with that said, let us move on to less riskier options. And here I will club 2-3 stocks. One is HDFC AMC, CAMS, CDSL. They are almost similar type of businesses. Why? Because at its core, they are AUM business. Now, what is the meaning of AUM business? Let me quickly explain. Now, see, here is the meaning of AUM business. For example, consider something like HDFC AMC. Now, what is HDFC AMC? It is an DII, so Domestic Institutional Investor. So all these DII, FII you read. So HDFC AMC is a type of a DII. Now what happens with HDFC AMC? Well, you might be getting a salary of let's say 1 lakh. उसमें से you invest 10,000 rupees. So what would you do? कि मैं buy and forget कर लेता हूँ. I will go and do SIP, Systematic Investment Plan. So every 5th of the month, you are going to give 10,000 rupees to HDFC AMC. That you will go to HDFC AMC manager and say that, you know what, here is my 10,000 rupees, go and take it. So the person will take, and it becomes a part of HDFC AMC's AUM. AUM means asset under management. Now, how does HDFC AMC makes money? It makes money by charging a percentage of AUM. So you might have seen that mutual funds charge expense ratio. They charge an exit load. Everything has to do with AUM. If the AUM grows from, let's say, 1,000 crore to 2,000 crore, commissions will almost be same, right? I mean, it might be like, let's say 1.5% or whatever they are charging. And now if they are on 2,000 crore AMC over 1,000 crore, then you can imagine that the profits are going to go up. This is part A. Part B is that AUM also grows if the stock value grows, right? Stock value grows. Now, how does this work out? So imagine this, that ITC 6-7 months ago, it was at 200 rupees. Okay. Now it is at 400 rupees. Now, will this lead to a higher AUM? The answer is yes. Let's imagine that the entire HDFC AMC's AUM is made of ITC stock, because when you're going and giving this 10,000 rupee to an HDFC AMC manager, what is happening there? This person is going to go and buy some stocks out of it, right? So probably, let's say that they only buy ITC, right? Now, over time, even ITC stock has gone up. So this will automatically lead to expanding of the AUM. So whenever a bull run happens, or whenever the stock market overall starts going up, AUM expands, people also panic buy. कि यार बस छूट रही है, we are going to buy, right? So because of both the things, the AUM expands for all these different companies. Now, what is CDSL CAMS? They are actually registrar, or they are actually doing the back-end operations of companies like HDFC AMC. So you can consider all these three companies to be similar. Now, if you have 5 lakh rupees to invest, then split your money and invest. Don't just put money in one single of these stocks. So let's talk about HDFC AMC. Now, if you consider sales, right? So this was a bad market. The last 2-3 years have been really, really bad for the AMC industry. Why? Nifty 50 ka dekh lo, right? You look at Nifty 50. Nifty 50 has given 0% return over the last 20 months, right? So hardly any return has happened. Still, the sales have not gone down. Their revenues have been up only, right? What about profits? Have profits gone down? The answer is no, it hasn't gone down. Now, if the market runs up by another 10% from here, the entire Nifty 50, then generally we can assume that all the segments are going to show a little bit of run up. Now, what is going to happen? The profits are going to further expand, right? So that expansion of profits is going to be really, really fast. And at what valuation are you getting, right? All the stocks. So right now, if you consider you are getting HDFC AMC at 2,000 rupees, what has been the highest ever price for this? It is almost 3,700 rupees. So the stock is almost like at a 40% profit even now. So even if it goes to this resistance level, which is like 3,000, now what is the total gain that you'll be making? You can easily make like a 33% gain on something like HDFC AMC. Now, what about CAMS? Now, again, very similar story. For example, if you check the valuation, the highest ever valuation was 37. And again, it is roughly at 2,000, exactly like same story. Even the stock price is similar. So what about results? Now, if you check the results for the company, nothing off, right? I mean, despite being a sideways market, the company has still generated more sales. The company has still generated more profits. A natural question comes, you know what, I read when HDFC AMC was falling down that competition is increasing for AMC companies. 100% yes, competition is increasing. But do you think that something like HDFC AMC or Naam India, which are like very old companies, they will not be able to survive? Right now, the situation in India is such, and I'm just quoting from memory here, that almost 3 to 4% of entire Janta invests in the stock market. Now, going forward, I'm not saying that this figure will become like 70%. You just simply assume that this will go to 8%. Now, don't you think that even if the competition doubles, these companies are going to continue to grow at the same rate? So if you have even 3 to 4 years viewpoint, then also you are getting a very good deal on these stocks. So, okay, so the next set of stocks would be something like HDFC Bank and Kotak Bank. So let me first and foremost show you some technicals, and then I will speak about the fundamentals of the stock. So let us first and foremost take a look at the long-term trend of HDFC stock. So I am drawing this trend line from August 17, right? So this is where I have drawn it. And now imagine that this analysis is actually true, then what is the amount of gain that you could make from a stock like HDFC Bank? So this is roughly 36%. Now you'll say, Acha, you have just drawn a random line and that's it. No. So another pattern plays out. So this is called as reverse head and shoulder. And again, if we consider this, the target or the same target is achieved. Now from a technical perspective, the stock looks strong, not from absolute short term, I can't predict it, but at least from a mid-term perspective, it looks solid. Now you might say that, you know what, I don't believe in technicals, show me something fundamental. Okay, so let me now present some fundamental data to you. So first and foremost, take a look at this date. So for the last 2 years, in fact, it has been slightly more than 2 years, right? So it's almost July, right? So if it's almost like what, 27 months, and in 28 months, the stock has given 0% return. Okay, so this is point one. Take a look at the numbers कि भाई ऐसा कुछ गड़बड़ हो गई, right, in HDFC Bank that it has performed so badly, okay? So let's take a look at that. So you will see that, you know what, in 2018, its revenues were 85. Have they been able to double their revenues in the last 5 years? The answer is yes. Have they been able to double their profits in the last 5 years? More than doubled, right? Almost like tripled. Even for such a big company, they have been able to double their revenues. They have been able to double their profits. Stock hasn't moved for the last 2.5 years. So what exactly is the problem with the stock? So that brings me to the story of SBI. But before moving to SBI, let me show you one very important point, that if you consider the pre-COVID levels of the stock, it was trading somewhere here. Right now it is trading here. So how much has been the gain? So the gain has been almost 29% over the last 3 years. This is including the COVID rise. Okay, so please note this point, that 29% over the last 3 years. Okay. Now what about SBI? The story that I was trying to tell you. So let me quickly take you to SBI. SBI has given a 75% return, and जो मैंने आपको पिछला data दिखाया था, the previous data, it was 28-29% for HDFC. I will say, यार, State Bank of India, Akshat keeps on cracking jokes at SBI, and SBI pre-COVID to now has given like almost 80% return. HDFC, which Akshat keeps on supporting, it has given like 28-29% return. So okay, so let's do the same analysis for SBI that we had done for HDFC Bank, right? Where I had shown you 2018 data, that how much it has grown in the last 5 years. So let's do the same analysis. That in 2018, State Bank of India was sitting at 228. Was SBI able to double its profits? The answer is yes. It was cost optimization. So suddenly all the PSU banks, they become hyper effective, and a lot of money moved to public sector banks. So in this rally that has happened for SBI, a lot of money has moved to PSUs. I, for example, had been a big supporter of PNB, had put in a lot of money in PNB, still sitting on a lot of profits. Canara Bank, Bank of Baroda, all these banks have given like massive rally. Now what happens is that once this rally is over, whenever it will get over at some point in time, where do you think the money is going to move? Most likely it is going to move to something like HDFC. In the short term, there has been a lot of commotion around the fact, you know what, HDFC merger is happening, merger nahi acha hoga, there will be a lot of problems. No, nothing of that sort. HDFC is the parent company. Now HDFC Bank is taking over HDFC. They had worked in tandem even in the past. They had worked somewhat as a similar unit. Now they will be working more integratedly. Once this merger is over and those clouds of uncertainty get shed, it's very given that something like HDFC Bank is likely to make a big move. Now, this is not guaranteed. Of course, it can get stuck for a year and a half. That can always happen. No one can predict that for sure. But fundamentally speaking, technically speaking, there seems to be no reason why HDFC Bank should not give a massive breakout from this point. Okay, so the next stock would be housing sector stocks. Now here, one of my biggest bets have been Aavas Financiers. I got a lot of heat for that also, that, you know what, you're bullish on this, the stock has corrected so much, this, that. 100% agree, but the stock has started to move back up. So I will show you the fundamental technical data also, but please note that at its peak, Aavas Financiers was at 3,000 rupees. It reached all the way to 1,300. So almost 60-70% of the value got eroded. It has started to climb back up over the last 1 week. If you check the investor data on it, you will see that FIIs have increased their positions. Even DIIs have not cut their positions. Ab kab badega, that no one knows. It can take like maybe even 1 year. But is it likely to go up? The answer seems like a yes, that big players are building their position. If you check the performance of the company, it is just mind-blowing. Forget about doubling. The company is growing at like a CAGR of 21% every year. So this is like massive growth rate from that perspective. Even profits of the company has been extremely good. Now comes the natural response ki yaar, acha, all this is good, but when will the stock move? See, I can't predict when exactly will it move, but as soon as the credit eases out. Now, what is the meaning of credit easing out? Well, credit easing out simply means that when home loans become slightly less expensive and there is more credit uptake, something like Aavas Finances is going to benefit. Something like Godrej Properties is going to benefit. Now, what am I doing? I'm a big proponent of Aavas Finances. I have very less position in Godrej Properties, but I have directly purchased a lot of properties that have already gone up quite significantly in value. I don't speak too much about it because, people started tying, you are trying to pump up Goa ki property. I see, I'm not interested in selling any of my properties. Those are just for me from a long-term perspective. I have zero interest in selling it. I was honestly making all those videos so that it benefit you because many of you look to buy properties without proper information. So I was speaking more from that front. Now, the reason why I'm bringing that example is fairly simple, that many of you might be having real estate directly. So if you already have it, then buying something like Aavas Financiers or Godrej Properties might not benefit, because all these companies will benefit only when the property market goes up, so to say, or when there is revival of the property market. Very likely that will happen once the interest rates are cut. Real estate, infrastructure are segments that will move very, very aggressively once the interest rate starts to get cut. So I hope you enjoyed this overarching discussion. There were more things that I wanted to discuss, but unfortunately we have run out of time. What I'm going to do is that I'm going to very quickly release another video on my Hindi channel. So the link of that channel is in the description and comment box. Please go and follow me there. I will release a Hindi video. Meanwhile, please understand the overarching nature of the Indian stock market as of now, that where is the market heading. I had analyzed the commentary of 3 big investors in India. Please go and watch this video. It will help you understand the macros associated with Indian stock investing. I hope you enjoyed the conversation and I will see you soon.